Hi everyone, welcome to BISP Solutions. Today, under Oracle Tax Reporting Cloud Services, we are going to discuss about the return to accrual adjustments. So we'll first see the scenario that we have taken, and then we'll move on to the application. So we have taken the entity as operations entity, which goes by the name of legal entity 101, and we have computed taxation for the operations entity for the financial year 20. So we have the tax provision, the taxable income for FY 20, and then we have some RTA adjustments as well. So here we have the profit before tax. Then we have certain permanent and temporary difference adjustments for the year. Then we have the elimination of the regional taxes, and which provides us with the taxable income before loss. And on this particular taxable income, after applying the tax rate of 21%, we get to the current tax provision on the taxable income, less certain tax credits or tax losses which were carried forwarded from the previous years. And after adjusting that, we have the current tax on taxable income before the RTA adjustments, that is the return to accrual adjustments. And for this particular year, we will be taking the return adjustments from the past two returns, which were financial year 19 and financial year 18. So we have already configured the financial year 19 in the application, which has given us the adjustments of 13,650, which are then added to my current tax on taxable income before the RT adjustments, which gives me a total of current tax provision, including the RTA or the return to accrual adjustments. So basically, return to accrual adjustments are the differences which are there between the book data and the return data of the previous financial years, other than the financial year for which we are preparing the current tax provision. So if I am preparing my current tax provision for, say, financial year 20, I'll be looking to trace the adjustments of the previous year return between the previous year return and the book data and the tax data. So if there is any adjustment between the book data or the tax data, we can say, and the return which has been filed, so any of the adjustments, in case it is present, we can pull it to the current year provision and create a provision including that particular amount in the current financial year. So we'll now move on to the application. But before that, we'll just see the RTA for financial year 19, how we have gotten this 13,650, which is my adjustment, which I have pulled in the financial year 20. So simply we have taken the P12 for financial year 19. This is the data belonging to FY19. So this is my tax data, and this is the data which has been filed in the return. So there are certain differences between these two data. So my NIBT, which is net income before taxes, is same in both the book as well as in the return. The permanent difference, however, has certain 55,000 difference, and the permanent difference stat to tax also has a difference of 10,000. And because of these differences of 65,000, I have excess of 13,650, which is computed at 21% tax rate. So I have a certain additional tax payable in my return filing at the time of my return filing for FY19, which has not been accounted in the financial data. So because it has not been accounted for in the financial data, my tax provision for FY20 will now include this particular amount in order to appropriately present my financial data. and map it with the return data for the previous years. So this didn't include any temporary difference adjustments. So we'll be configuring for FY18. So we'll try to bring in some temporary differences as well, which will lead to creation of the deferred tax assets or liabilities, as the case may be. So we will now move on to the application. So in order to configure the return to accrual adjustments, first we'll have to go to application, we'll go to configuration, and under configuration, we have the RTA automation. So we'll just open it. So my RTA automation will just provide me the detail for the years of the return filing that we want to pull the data into the current year. So in case I want to post the RT adjustments in FY20, so I'll select FY20 in my point of view, and I'll just click on go. So as you can see that the return year 1 from which I want to pull the RT adjustments is FY19. The return year 2 from which I want to pull the RT adjustments is FY18. And the period in which I want to post these RT adjustments is period 12. So generally, period 12 is the last period. We can also take quarterly periods here as well. But since we are doing it on a YTD basis, so we are taking the period as period 12. So we'll be making any adjustments in the period 12 from the financial year 19 and 18 RTA adjustments to the FY20 period 12. So we'll just select the years from which we want to pull the data, and we'll just click on save. So since it was already selected, I have not selected it again. You can just click on save. So the data has now been saved. We will close this particular configuration. So this was my backend configuration. Now I'll just go to my provision package for FY20. So my current provision form for FY20 period 12 is having the provision calculated as 5581893, which includes the RTA adjustments of 13650, which has been pulled from FY19 as discussed in the use case or in the Excel file. So when we will open it, the total additional current provision, we'll drill through it and we'll see the return to accrual current tax expenses as 13650, which is included in the total current provision, which is going to be roll forwarded in the current tax uh, provision TAR roll forward form. So once again, we'll just cross check it 5581893 and 5581893. So this is after including the RT adjustments for FY19. So we will now go to the RTA form, which is available in the package. So we'll just go to the RTA form, and in RTA form, we will have to select the year for which we have we will want to pull the data into the selected data. So we want to pull the RTA data from FY19, which has already been pulled. So we're just going to see how the particular table has been presented. So we have the period 12 data, and we have the RTA data for financial year 19, and the differences which were in the permanent differences gap to stat of amount 55,000, and the permanent differences stat to tax amounting to 10,000. So the total differences that we have is 65,000, and the tax rate will be the current tax rate. So the tax rate after computing the taxation is 13,650. The tax amount is 13,650. So this particular 13,650 gets automatically mapped to my FY20 package for current provision as we have seen just now. So we'll just see it again. So since we have done the backend configuration for FY19 and 18 to get the return data, return adjustments pulled to FY20, we are getting the 13650 pulled directly to my FY20 current provision form from the financial year 19. So now I would like to do the similar process for FY18. So currently we don't have any data for period 12 FY18 and for RTA period FY18 as well. So we'll try to load the data, or we may be having some data, but we have not configured the tax automation rules for them. So we'll just check it in a bit. So for FY19, we have the data loaded under P12 and under RTA. So that is why we have the RTA differences, which because of the backend configurations that we have performed for RTA automation, loads this particular differential data, differential figure to my current provision, FY20. Now we'll just change the year to FY18 and check whether there is any data in period 12 and RTA. So currently you can see that there is no data which is mapped in the period 12 for FY18 and RTA period FY18. So we will just go back to package and check the income statement. So under the income statement by source, we have for this particular POV, that is period 12 FY18, we have the pre-tax book income, and we have certain permanent difference accounts which are mapped in tax automation. So we have certain data here, but that is not being configured right now. So we will have to configure it, but we'll just check for the RTA. So do we have any data for RTA period as well for FY18? Because we ought to have the data in RTA period in order to perform RTA adjustment. So we ought to load the return data. We can load it either through bulk loading through SmartView or through data management capability. So we have the same pre-tax book income. We have certain difference in the figures for meals and entertainment, which are my permanent difference accounts. So we do have data in both period 12 FY18 and RTA FY18. So now what we are going to do is we'll go to the home page and we just configure it with the tax automation. So we'll go to configuration and we will check whether we have the tax automation configured for FY18 period 12 and RTA period. So we do have the periods, we do have the configuration done for RTA period for FY18. We'll just check the period 12 as well. And we'll also have to check the tax rates, whether the tax rates have been loaded in these particular periods. So we do have the mappings for this as well. So we'll now just check for the tax rates, whether we have the tax rates loaded for period 12 FY18. So we don't have the tax rates loaded for P12 FY18, and we'll again just check the RTA as well. So in case we don't have, we'll just copy the rates from any other period. So we don't have them. So we'll use the capability of copying the configuration from another year. So we'll go to copy configuration by entity. We'll copy the tax rates. We'll select the scenario as actual. We'll select the year as FY19. We have seen that we have the tax rates rolled forward in the year FY19. We'll change the target year to FY18. We'll select the source period as P12. And we'll select the target periods as P12 and RTA for FY18. And we'll just click on run. So once this is done, we'll now just check whether the tax rates have been mapped. So we can see that the tax rates have been mapped for RTA and P12 as well. Just check it. So we have sourced the tax rates from financial year 2019. So once this is done, we'll just go to the RTA form again for FY18. We'll go to tax provision national. Also, this process can be performed individually for regional data as well. So we have the RTA form. Now we'll just run the consolidation for RTA financial year 18. So that my adjustments are available to me and are available in the current provision for FY20 as well. So once we have run the consolidation for RTA 18, it has automatically provided me the differences because it has consolidated P12 as well. And certain differences are there. So we have a 120 gap in the permanent differences gap to stat. And similarly, we have a difference in the permanent differences stat to tax, uh, which is negative of 135. So net difference is negative of 15,000. So we have a net refund of 3150 here. So we have not mapped any temporary differences here. So we like to add some temporary differences as well. So I'll just try to put some temporary differences manually in the RTA form. So I'll add the bad debts, say 50,000, and I'll click on save. And we'll have to perform the consolidation again. So we'll just perform it again. So now you can see that we have a table of 7350 after adding the temporary differences here. So we just move to the current provision form and see how this is showing in my FY18. So we'll check for financial year 20 because that is the targeted year for the RTA adjustments to be mapped to. So we'll have to run the consolidation also for this particular POV, that is FY20 period 12, in order to roll over the RT adjustments here. So we'll just run the consolidation one more time for P12 FY20. Click on launch. So now we have an additional RT expense of 7150, which is added to my RT expenses for FY19, which has now given me a total of 21,000. So now I have an additional tax provision, which I'll have to create in my books, which is getting totaled in the current provision. So and one more thing we'll check is that we have added some temporary differences in our RT adjustment for FY18. So we will be able to see those temporary differences in the temporary differences form, as well as the deferred tax form. So we have a specific movement for that. So we have a return to accrual deferred only movement for the 50,000 amount that we have uh, manually adjusted in the bad debts. We'll just drill it through. So we have a bad debts of 50,000, which is under this particular movement, which is returned to accrual deferred only. And we will be having a calculation of deferred tax also on this particular amount of 50,000. So we have a 10,500, which is, we just cross check it once. So 50,000 into 21%, so which is 10,500. So yeah, we will be having a deferred tax calculation as well, because we have added certain temporary differences in our return data, which were not present in the uh, book data or at the time of tax calculation, which was some additional point data which was included in the return data. So that is why those data now needs to be accounted for in the book accounts or in the roll forward accounts, in the GL accounts. And that is the reason we perform the RT adjustments in the TRCS application. So hope this was helpful. Thanks for joining us and have a great day ahead.